See, afraid I see no go. Oh shit! Afraid I see no Google search and let me see how good thing.
I'm weak, son.
Oh, really complicated things. Sorry about it. Okay, boom, right?
Yes.
So this here, this is different ways you can enter a trade, right? Besides the market execution, where you enter the trade exactly where the market's at right now, you have what you call a buy stop. You have the options on your MetaTrader 4, and then you have what you call a sell stop, right? Then you have buy limit, then you have sell limit. The buy stop is where, let me go on trading view. And now they go learn how to use this platform. Do you know about it? Alright, so the buy stop, right, is where the market is under the level you want to enter at, right? So let's say you want to enter at this level right here, right?
Yes.
You could set up this trade so that whenever the market hits that price, it automatically enters when you're not even looking, right?
Okay.
You just go in, and how it works is for the buy stop. The buy stop is basically an entry where you're expecting the market to continue in the direction it's going, right?
Yes.
So you would enter into MT4. If you want to buy at this price, you enter at this price level. Then you enter your stop loss. So if you put your stop loss, if you put it down here,
Yes.
and then you enter your take profit wherever you put it up here. So when the market moving and it hits your buy stop, it's gonna mark buy stop. Then you're automatically in the trade, right?
Yes.
And if it keep going up, you'll be in profit. However, if it turn around and it go down another level, you'll be in loss. And if it hits your stop loss, you'll be out of the trade, right?
Yes.
Can you do it like the opposite way to prevent you from losing money? So you put the sell stop, so when it reaches there, you just exit the trade automatically.
Yes.
Um,
Oh, that's nice.
Yeah, close.
yeah. I mean, it had like four options on how you can enter a trade, right? So, oh shit, I come off that thing.
I wanted to learn this a long time ago. I can't believe it was so easy.
Okay, no, for the sell stop is the exact same thing, right? But it's the opposite direction. So let me hop down to the 4 hour. So let's say you want to enter the market down here because you're expecting the market to fall and keep falling, right? You would put your sell stop right there. You would mark your price. When you enter anything to your phone, you put your stop loss wherever you feel like putting your stop loss. And then you put your take profit wherever your target is, right? So when you have it like this, once the market hit this level, then you're automatically in the trade. If the market doesn't hit it, then you would never enter the trade, right? If it continue going up, then you would never be in the trade. If the market come down and it hit this level, then you'll be in a trade, right? And for these types of trades, you expecting the market to continue going down. So the reason why people would enter one of these one of these type of orders It's like, for example, um, let's say the market is in a downtrend, right?
Yes.
This whole thing here is like a downtrend, right? This whole thing here is like a downtrend. And let's say the market is on this level right here, right? Let's say
Yes.
the market right here. And you expecting it, okay, let's say they're right here. And you expecting it to continue going, none of this happened yet. And you expecting it to continue going down, right? Now, what you could do, you just set the price, you set your entry here, and you set your stop. Let me just use the
You
tool.
might have to use different colors, kind of,
Yeah. Let's say you just set your entry here, you set your stop loss, and then you set your take profit, and you know that if the market continues dropping, because you probably see, okay, the market going to drop now, but you're kind of too scared to enter now, okay, you feel like it'll turn around, then you'll say, okay, well, if the market reaches this level, then you sure as a downtrend, you know, and once you reach that level, you'll automatically enter and it'll continue in your direction, right? That's if you're expecting it to go down. No, that is a sell stop. You have that option on your MT4, because sometimes I would when I send a signal, it won't always be a market execution. Sometimes I might say sell stop, this price, stop loss, that price, take profit, that price, and then you had to go and select sell stop to 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 enter the trade. Now you can save this, right? Because you see where you mark buy stop here, it had a price going straight through the level. For sell stop, it had a price going straight through the level. And for buy limit and sell limit, you could clearly see what happened in day. That's for like reversal trades. That's my kind of specialty. I like trades that is reverse, right? I like to catch it as soon as it turns. So a sell stop would be something like, a sell limit would be a trade where the market reversing, right? So it'll be like something that come up. Let's say you want to enter on this level, you put your sell stop here, and you're expecting the market to come up, activate, and go down, right? For your sell stop. So it would look something like this. The market would be somewhere down here. I would send you a chat like this, and I would say, okay, this is a sell limit, right? Let me just clear up all this. Yeah. So, okay, let me give a prime example of how we would probably enter, how I would send you a sell limit, right? So let's say none of that happened yet. And I expecting the market to reverse on this level right here, right? Based on my strategy. So I would send y'all an image that look like this. And just you seeing me sending this image, you had to be able to tell that this is a sell limit because the market has not reached the level I want to sell at yet. Remember, you want to sell at the level between the red and the green, which is a black line, right?
Yes.
So when you enter in the sell limit, you just take down this the black number here, take down your stop loss, and you take down your take profit. And then you click sell limit, right? You wouldn't see any active trades. Only when the market hit that level, then the trade will activate by itself. Sometimes you will be sleeping, and then you just wake up in the morning and you see you either win money or lose money, or you have an active trade running, right? Now, if the market just continues that direction, the trade will never activate. So, right there, if I had sent you that trade, that's where the trade would have activated, and you would have been in some loss. But because it's a sell limit, you're expecting it to reverse. You're expecting it to go up. Yeah, you're expecting it to go up and reverse before it can hit your stop loss, right? So All right, you'll be in profit, and then boom, it's your stop loss. You're out with whatever profit you make. Sometimes you don't. Sometimes you can enter a trade without even having a stop loss, and that trade would just keep running. Like you could enter a trade for years. Your trade would never close itself. Trades people enter trades for years and they just have it running. Once the market going in your direction, the trade will never close unless you close it manually, right? That's why you could be in some trades for months and weeks making money if you enter correctly, right? So this is the daily chart. If you had catch this trade was 350 pips, $1 a pip, $350, $10 a pip, $3,000. So that is the sell limit. And I would save this picture, sent in a group so you can review it, right? For the buy limit is exactly the opposite. Is exactly the opposite. It would just be a trade that you enter. Let's say none of that happened yet, and we expected the market to reverse at this level here. I would send you a picture like this. I know you had to input that information into your phone. You click buy limit. Once you see the big green box on top and the small red box on the bottom is a buy. If you see the small red box on top and big green box on the bottom is a sell, because you're always risking a small amount to gain 3 or 4 times the reward. So when you have a buy limit, you're just expecting the market to drop, right? Activate your trade and then turn around before it can hit your stop loss and go to your take profit. Okay, well this one hit the stop loss, but you get what we're trying to say. And sometimes the trading will work. Sometimes it will hit your stop loss. Then that's just a losing trade. But you're learning how to obviously survive in the market and place winning trades, right? So that's the buy limit, the sell limit, the buy stop, the sell stop, and I'll show you what it look like on your phone right now. So you hop on your MT4, right? I should probably use the mark on for this. Alright, so let's say I send you a trade, right? And I'll pull up the trade we just did. I'll pull up the pair we just did. Alright, so everybody can see my screen, right?
Yeah.
Yeah.
So let me say we go on gold, for example, since we trade in gold, right? We go on the 1 hour and we decide, okay, we want to enter a trade if the market drops to this level, right? We just for the phone's sake, we mark the level. We say, okay, that's the price you want to enter at, 1334. We put our stop loss at 1331, and then we decide we take profit at 1531, and then we decide we take profit at 1543, right? Now you write down them numbers, you remember them numbers. You expecting the market to come down, enter the trade, and then bounce back up, right?
Yeah.
Because that's you're entering a buy limit, right? You just go into your trade, well, you can click trade from here. You enter your lot size, $1 a pip, 0.01 is $1 a pip. 0.50 is 50 cents a pip. 1.0, $10 a pip. 10.0, $100 a pip. You could go up to $1,000 a pip, just depending on how much money you have in your account, right?
Yes.
So we will do $1 a pip because it's easier to count the pips that way. You know every pip is $1. And then you click on market execution, and then look, you have the options here. You click buy limit, you enter the price you wanted to buy at. If anybody remember the price, what it was?
It's like 15 something.
You say 15.43.
6.43 around there.
Stop loss 15.41. Take profit 15. You say 46, right?
Yes.
And click place. Okay, we was way off. But you understand what I'm saying. So you see, now we had a buy limit level. We had a buy limit. We had a stop loss. We had to take profit. So if this market come down and hit buy limit, then you'll just see the trade automatically enter. Here you'll have it here, but it wouldn't show anything. Like you'll just mark buy limits, and I go mark the price. Right? For sell limit is the same thing. You click sell limit, you put in your price, 48, you put 50, let's say 50 for example, and then you put 25. And now you have the sell limit on top. Let me just take out the buy limit. Oh fuck, I took out the wrong one. Let me put this back. See, 48, 50, 45. When you delete it, it will go into your history. And then you can see here, now we have the sell limit. If the market come up and it hit that level, then the trade would automatically enter. Right? Any questions?
No, not really.
Alright.
No, we're done.
Okay.
Delete order. Alright.
Okay, so then we go. I'm not sure was candlestick.
If you find the buy limit and sell limit a bit too complicated, can you stick to the first method? Is that still safe?
I mean, it's not complicated.
Trading?
It's not complicated. You see, because sometimes you don't have to use a buy limit and sell limit on it. But sometimes you want to enter at a level and you don't want to keep your eyes on the charts all the time, you know, because sometimes I would say, okay, I want to enter at this level, this price, because that's the best price I could enter at. But the market not there yet, and I'm not planning to look at the market for the next 20 hours, you know, because a lot of the times the market moving when you're sleeping, because the market does move the most from 3 a.m. in the morning, London session. That's when everybody in London starting to trade. The market has started to move at 3 up until maybe 12 o'clock in the day, right?
Yes.
So yeah, so I just want to explain this candlestick for you, right? And probably the time frames. So, like I said before, wow, Jordan, I don't believe what just happened.
No, I don't.
Jordan, give me sushi. A real soldier, real soldier. I'm telling you, a real soldier. Sushi is the way to my heart.
Is visa required to come to Grenada?
These are nah, man. When you're ready to roll, let me know that. In the
Ah,
Caribbean, dog.
we'll visit over there soon, you know? That bike life.
When you make a profit, just come through. I tell Rashad he had to get a tattoo once he make 10,000. Easy and
Yeah,
simple. But yeah.
all that bike life thing.
hmm So back to the candlesticks, right? Now, when it comes to trading, it have four different type of traders, right? I don't know if I'll read up on this, but they have position trading, and it have swing trading, and then it have scalping, right? Now, these three are basically trading styles, right? You have to pick a style to suit your personality, to suit your schedule, right? Position trading simply means you enter in a trade and you're holding that trade for months, for weeks, right? That means you enter in trades on the daily, weekly, monthly time frame. So you would find that setup on the daily time frame like we on right now, and you would enter short here, let's say at the daily time frame, and then you would hold that trade over the next few weeks, right? Your target will be thousands or hundreds of pips away. No, that type of trading is for people who busy. These people who position trade, they only look at the daily time frame. They only look at the weekly time frame and they only look at the monthly. They don't go into the lower time frames, right?
Yeah.
Because when you're only looking at the daily time
Yeah.
frame, that means you're only looking at the chart once a day, once every few days, because you're waiting for your setup on the daily time frame. Yeah, you're waiting for the market to set up on the daily time frame. So you won't find a setup often, but when you do, you enter the trade and you hold it for days, right? So that's what people that's busy. If you don't have time to look at the charts every day, that's the time frame you should be trading, right?
So like
Hmm?
for the trade decent and I am home all day, I could enter on the 4 hour time frame or the hour time frame.
All right, let me get into that. We'll get into that. No. Swing trading is where you're using the 4 hour and the 1 hour time frame. That's more like a zoom in, right? That's when you yes sir. That's when you trade in like for a few days, a few hours basically. You would look at the 4 hour time frame and the 1 hour time frame. You find a setup and you just enter that trade for a few hours. So when you swing trading, you would probably look at the charts like 2 hours a day or hour a day. To find your setup. You want to be in and out. You want to be out of the market before the end of the week and making money quick, right?
Yeah.
Yeah. So scalping is when you're down on the 30 minutes, you're down on the 15 minutes, you're down on the 5 minutes, right? Now when you're down on these time frames, the market does look crazy and it does move fast, right? So that's for the people that just like they just wanna enter trades for a few minutes in and out, right? You would find a setup and you would only take like 10 pips. So so a scalper might enter a trade like this, right? You enter at this level and you take 17 pips, right? Now, scalpers, they use high lot sizes. So they would end like if you use a swing trader, because you enter in a trade on the higher time frame, like the 4 hour and the daily, right? You want to give your trade, usually you had to give the trade room to breathe. You don't want your stop loss to be close, otherwise you just get stopped out quick. So you would enter a smaller lot size. You would enter a trade for $1 a pip, right? Now, scalpers, for them to make money, they usually enter trades for much higher. So they would enter a trade like, okay, a swing trader would enter a trade for $1 a pip and catch 100 pips. They make $100, right? A scalper, they make $100 through the day. Like it would take like a day or 2 days to make $100. However, a scalper, they would enter a trade for $10 a pip, and they would only grab 10 pips out of the market, for a few minutes. Like as soon as the market moves 10 pips, they out, and they make $100, right? Scalping is like, that's when you can scalp. Like I don't scalp all the time. You can scalp when you're comfortable, when you're confident in your strategy, and you just want to go in and out, because the market does move fast on a lower time frame. The bigger the time frame, the slower the market. The smaller the time frame, the faster the market. So just how we on this 5 minute chart, if we drop down to the 1 minute chart, we go just see candlesticks every 1 minute, you see a new candlestick. However, on the 5 minute chart, every 5 minutes you see a new candlestick. If you understand what I say.
Mm-hmm.
And this website I'm using, this is a website we use to analyze the market. And you would learn how to use this website, you would learn how to set it up, and you'll learn how to analyze the market from this website, right? Any questions? Oh, the ATR? No, it doesn't use the ATR. So I can't really tell you about it, So if you want, you can take it upon yourself and study it and learn it on your own. I mean, I know how to use it, I just don't like using it. Now you see it at a point in time, right? So let me just break down some for you real quick, right? Now this over here, this is a list of currency pairs. You have a lot of currency pairs to choose from, right? But it's best that you stick to just a few, Personally, stick to the major currency pairs because they have a smaller spread. A spread is like the space in the middle the broker does get, the two lines. And they'll move more clean. Like if I were to go on let me see if I could find a pair. It has some pairs that just don't look good to trade. Like it is. Let me get an example, right? Okay, so when you're starting to trade, you want to pick a currency pair, and you want to make that currency pair your favorite, right? Personally, the easiest pairs to trade is Euro USD and USD JPY. That's just because these pairs the trend is easier to see, right? So
Yeah.
we'll hop on the daily. Like for example, this is Euro USD trending downwards, right? You as a trader, all you have to do, you look at the trend, you wait for it to pull back. I mean, I'm gonna show you how to enter the trades, but this is just so you can see how clear Euro USD does move. You see Euro USD moving in a clear trend. you know, it moving down nice and smooth, you know. However, it has some pairs that doesn't move like that. They just move real stupid, and that's like the pairs you don't want to be trading. Like this here, like this one right here, right? Okay, maybe this one look a little good. Let's see if I get one that will go good for there. But anyways, you get a point. So personally, my favorite is oil because oil. I mean, I don't want to be our favorite, but I like oil because oil does move hundreds of pips in a day. So instead of me waiting, instead of me waiting like 5 days to catch 100 pips, oil go just move 100 pips in a couple hours, just like it did today. You
Yeah.
know, some pairs move faster than others. So if you want to take your time and you want to be safe, you pick a pair that moves nice and slow, like USD CAD, right? USD CAD will probably move 25 pips for the day, you know, so it's not no kind of fast rush movement. You can take your time, analyze the market, and make money. But when you get good, you want to be able to make money fast. So then you would trade oil, gold, and US 30. That's the three most volatile pairs in the market that
I love you.
literally that move hundreds and thousands of pips in a day, right? But if you're just starting to help to make things easier, pick three pairs and stick to them. Don't watch nothing else. And just study them and keep watching them because all of them have a personality. They have a way they just move that you would kind of pick up on, right? Because the more you watch these charts, the more you'd see shit that kind of repeats itself. You kind of get a gist of certain stuff, right?
Yes.
Okay, so back to what I was saying. Where is USD CAD? Okay, I was explaining the candlestick player, right? Now, this candlestick you see in here is called a Japanese candlestick. Some man in Japan made it, right? It's basically made up of a couple components. Let me try to get through. Okay, so this is what a typical candlestick look like, right? Yeah, nice looking tool here. This is the body of the candlestick, right? The body, right? This is the wick. Um, let's say this candle was green, for example. I'll just put it green. Green simply means that the market going up. I know my candles is all different things, but it's usually red and green, right? Green means it's a bull candle, it means the market going up. Red is usually a bear candle, it means the market going down, right? Now, when it's a green candle, that means that the market, where you see the body begins, is where the market, where the new candle starts, like where the market open, right? So this will be the open of the candle, and this could be the close, right? So what it simply means is that the market, the market, let me turn this back. What it simply means is that the market opened on this level for this candle, right? So whatever, like let's say now was 2:59 and it's about to be 3 o'clock. As soon as it reached 3 o'clock, the market will just open on this level, right? Now, if the market moved down, you would see a red candle. But then once it come back above the level where it opened, it would be green, right? Now, once the market come up here, right? And let's say it go up a little and then come back down and it close right here. That's the level where it closed. So from wherever it opened to where it closed is the body, right? Is the body of the candle. And the wick is where the market reach, right? It's like the market ended up coming up this high, but it didn't close this high. It closed down here. So the wick is just the level of like how far the market reach, but it's not actually where the market closed, right? So okay, these candles are the red the bear candles, the down candles is black, and the bull candles, that's kind of supposed to be green, is blue, right? So for this example, you could see the market when the market was making actually okay, let me go back. Right. So for this candle, right? This candle right here. Everybody paying attention? Just drop something in the group chat if you're paying attention. For this candle right here, I'll see my highlights. This simply means that the market opened on this level, right? It opened on this level. The market come all the way up here and made the wick. It come all the way back down here and made the wick. However, when the next hour starts or the next day starts, the market was here when it closed, right? So this is why the body is small. And then when it move on to the next candle, it opened right here. Right where it closed, it opened for the next candle. And this candle came up to this level. That's the highest level it reached. Wherever is the top of the wick is the highest level it reached. And then it come back down. The bottom of the wick is usually the lowest level it reached for this candle. And then the next and then it closed right here, right?
Yeah.
So you understand what I'm saying? I'll just screenshot this.
Is there a limit on how big a pip can be? A candlestick, I mean.
No limit. The candlestick must open and close. You know, like sometimes it has some dog. You would see some. It does have some. I'm not sure I can. I'm not sure how messed up this can get sometimes. Look at this one here. No, you see for this one candle, it open. It come all the way up here, right?
Oh wow.
And then it come back down and close. That was like that doesn't normally happen. That was something called like a pump and dump, a spike in the market, like something crazy happened that day.
That was an NFP. That normally happens at NFP.
Yeah, but that was something crazy that happened in the beginning of the year. It wasn't an FP. So the market had jump up 2,000 pips and come back right back down. So anybody who had any kind of buy trades, any kind of sell trades, any stop losses it had, gone. A lot of soldiers fall on that day, you know. But you can't watch that.
Yeah.
That's why I had a higher stop loss. Now you see, if you didn't have a stop loss and you had a sell trade here and you didn't have no stop loss, because you choosing to enter the stop loss or not, right? If you had a sell trade there and you didn't have no stop loss, your account probably wouldn't be able to handle this spike, because this would have just been taking out money out of your account in whatever negative pips. Because this was 2,000 pips, and if you had $1 a pip, that is $2,000. You would have lose in a few minutes. Your whole account would have go. You'd have been down to zero if you didn't have a stop loss. But this is why we have stop losses to protect us. This is why we have stop losses to determine you decide how much you're willing to risk for every trade. If you're not willing to, if you're only willing to lose $100 on this trade, then you set your stop loss to the level where it's $100. So adjust the size of your trade to where it's $100 for the trade, right? So any questions about the candlestick? No questions about the candlestick.
Yeah, it
Mhm.
could only open. I see. I said open and close, but it could either open at the top or the bottom and close at the top or the bottom, or it's bottom for open and top for close.
Nah, it could close either direction, right? Now, let's say this is a level. Okay, this is a level it open on, right?
Yes.
If this is a level it open on, and the market decide to close under this level, then this would not be a bull candle, it would be a bear candle. And the color would be red instead of green. You understand? So if it closed under where it opened, that means the market was going down because it closed lower on a lower level than it opened. And that would make that what kind of determines the color of the candle. So if it had closed under where you see I have this open here, if it had closed below, then it would have been a bear candle, it would have been red. You understand?
Yes. Let them know that they can view. They could zoom up your screen if they are not seeing clear.
Yeah, you can zoom in on the screen if you're not seeing clear.
I just figure it out.
Any questions about candles? Ask questions, Ask questions. No questions.
Why is it like that in London session? London session, you have longer candles.
Longer candles?
Yes, I noticed like for a London session, you normally wake up to see longer candles.
Okay, so basically, oh boy, I'm gonna show you that piece. I go ball. I used to tell them, men, yo, I'm making 1,000 US a week, like it's nothing, right? The men never used to believe me that. Never. Watch that. No, all you see when I started to teach this class, this was $400 I started this week, right? $400. That's all the trades we closed for this week. I sent all of them to the group, and I sent these to the group too. So whoever in, just drop all your chats in the group chat. Whoever took these trades, just drop all your chats in the group chat so we could See what's going on.
I cleared mine when I was opening the live account.
Okay, but don't worry, we still have a few days in the week left to find more trades, right?
Yeah.
But yeah, back. And another thing, like when you're trading, you have to leave your emotions out of it. So even though you see you make $800 today, you're not even supposed to feel nothing. You're not even supposed to feel happy. No emotions at all. If you see you lose $800, same thing. Whether it is a win or lose, you can't celebrate. It's just another day in the market. But yeah, you was talking about London session, right?
Yes.
Okay, so here's the thing. When you're trading, there's what you call trading sessions. This simply means this is the time of day that people on this side of the world starts trading.
Oh.
And when people start trading, that's money going into the market, and that what has caused the market to move, right? So, for example, if a bunch of people decide that they're selling, let's say a bunch of people in London start trading, right, at 8 o'clock in the morning London time, and everybody starts selling USD CAD, there's a lot of money going into sales for USD CAD at the same time, and that will cause the currency to drop rapidly, right? So that's why you would see the market move a lot at 3 a.m. because a lot of money going into the market at 3 a.m. in the morning. So, now we got proper, right? Yo, what happened to it? Oh, you want them to do one with it? But go on YouTube. That's what they tell you? I put a bunch of sugar in it. You see what going on the I don't even know what coast I am. I think I'm on the west coast. Anyways, so nah, that is not good. That is not good. Yeah, a nice like a timetable for sure out there, right? Okay, all right. Everybody can see this, right? Everybody can see this.
Okay.
So this is like a, let's say, a timeline with the different sessions, right? Basically, every day at 8 o'clock in London and 3 o'clock in our time, people
Yeah.
in London in their hedge funds, in their businesses, they start trading. They start exchanging money and traders start trading, right? So
Okay.
that will just add a lot of money and a lot of volume into the market and cause the market to start to move quick, start a trend, right? So that's why I would look for a trade set up around right before 3 o'clock so that I enter it and then I know that the market will move within the next few hours. Cause a lot of money going into the market, so the market will start moving, so I can start making money, right?
Yes.
And then 8 o'clock is when people in New York, all the millionaires in New York, all the people who have money, all the people are trading. That's when they decide to open up their hedge funds and start trading, right? New York, London, those close. People will stop trading in London around 11 o'clock. New York time, right? And New York traders they start trading at 8 o'clock in the morning. So like when I lived in New York, I used to wake up 8 o'clock in the morning because I used to trade New York session, right?
Yeah.
However, London session, nice to trade too. But I can't wake up 3 o'clock in the morning all the time. So I just used to wake up 8 o'clock to trade New York session, right? But that's just like if I scalping, like if I want quick money, quick moves, right? When New York and London clash, that is between 8 o'clock and 11 o'clock in the day. That is when the market have the most money, the most volume. That's when you will see the biggest candlesticks. That's when you will see the market move 50 pips quick, right?
Yeah.
New York session is in 5 o'clock, and after that is the Sydney and Tokyo session. So during 5 o'clock, from 5 o'clock in the night, go down to up to 3 o'clock in the morning. When you look at the charts, you go find like the market hardly moving, all the candles stay in one place, they're not trending and moving, it just kind of be in a 10, 20 pip range. That's because all of the big money not really participating in the market, and the market won't move at 50 pips one. It will move like at 10 pips. And then when it comes back to New York and London session, that's when you see things go pick up, right? So a lot of the times, like as 5 o'clock reach, like I doesn't even look at the market again because they don't have no money inside the market. But good asking that question, Ramir and Liron. Mike, if you're pouring your water, dog, Mike, mute your mute your thing, mute your thing, dog.
We uh,
But yeah, any other questions? Good questions, Ramir. Good question. Any other questions? All right, so we've been going for like an hour now. I think we cover a lot of good stuff. I'll go send earlier. I'll write out what we do in this class, and I'll put up the video on YouTube.
Yeah.
So if all you got no more questions, we go hop back on the group chat, and then I'll probably send out whatever trades we have to take today, right?
so we will
Um,
live
Narun,
on this ends.
you can only use trail and stop on the computer, on the app.
So, you think I should withdraw the 50 from Traders Way and upload it to XM?
I mean, you could use Traders Way. That's soft. You can use Traders Way. Traders Way does give you a bonus too, so you can take advantage of the bonus. When you make some profit, then eventually you can move over to XM.
Okay.
We go tomorrow. We go open up live accounts. I would make a video or give all the instructions on how to open up a live account. It's real simple. It's real simple. So I'll just tell all how to do it in the group chat. And if I have any other questions about it, then we will attack it in the next session. But opening a live account, if you're in Grenada, you can open a live account within 1 day. All you need to open a live account, you need your ID and you need your proof of address. Your proof of address to be a bank statement. And then you sign into the broker and you put your information and then you upload a picture, your ID and your proof of address. And then a couple hours or a couple minutes, they will tell you if you're verified or not. Usually you're verified in a couple minutes. And then after that, it's just deposit money using your debit card, and the broker will email you the password for you to use on your MT4 account, right? We'll have a session where we're going through how to do all of that, how to deposit, withdraw, all of that with the broker.
So how much does a broker take?
The
Like,
broker doesn't take nothing when you're drawing your money. They doesn't or depositing your money. They does only take money when you enter a trade. They just take a few cents.
They, most brokers take like 7 cents, like
Yeah.
0.01. The higher the lot size, the more commission they take.
So like if you open up a lot, a trade for a standard lot, which is $10 a pip, which is 1.0, then they will take $7. But if you open up a trade for $1 a pip, they will take 70 cents. Alright. So I'll talk to all you later. If all you had a good session and all you learned something, drop
Yeah.
something in the chat. If all you don't learn nothing, like Rashad didn't learn nothing yesterday because he wasn't paying attention, drop something in the chat.
Stretchy, just like you like it. Essentially like stretchy, but I do like nuts. But you don't like not stretchy. That's correct. Very nice. Very nice. So you get all right. Just look at yours now. Well, it's pretty good. I forgot. What a picture over here. Oh man,
We will lock off now because I've been going for like 2 hours. Not even 2 hours, more than 2 hours because I start since 8 o'clock. Later.